Let's get to work together.
All right, Mellody, let me start by asking you, what is Project Black?
What we're doing at Ariel Investments is we are starting a new business. It's called Ariel Alternatives. And what Ariel Alternatives is doing is we started an initiative where our goal is to scale sustainable minority-owned businesses that have two things that we bring together: capital and customers. In so doing, we're trying to create tier one suppliers to Fortune 500 companies and really drive growth in a very new way as it relates to minority business enterprises.
Explain to those at the conference and those that will be watching virtual around the country, what impact will it have on Black businesses' ability to grow and scale?
This is something we're doing that has never been done before. And that is specifically, we are targeting businesses that have revenues of $100 million to $1 billion. So we're going towards bigger businesses. And in so doing, they may not be minority businesses before we buy them, but they will be afterwards by virtue of our ownership, by virtue of the leadership that we will install in the C-suite of those organizations. That doesn't mean we throw people out. We will enhance. It also means that we will have a majority minority board. We will have exceptionally diverse workforce. And at the end of the day, we'd like to create a situation where there's ownership of the company from the C-suite, those chief executive officer roles, chief financial officers, et cetera, to the rank and file. And the idea that we have is, in so doing, we can create more economic opportunity for Black and Latinx people and ultimately narrow the wealth gap in this country. If we're successful, we will have created billion-dollar Black and Latinx businesses in this country over the next decade. And that does not exist today.
Now, explain why this is so important now when we've lost so many Black businesses due to the COVID-19 pandemic.
It's so important right now because we need businesses of scale. 95% of minority business enterprises in this country have less than $5 million in revenue, 95%. At the same time, we have all of these Fortune 500 companies out there that say they want to do more in spending with minority vendors. Right now, those Fortune 500 companies are spending about 2% of their spend, which equals about $125 billion a year with minority business enterprises. But their stated goal, what they're saying out loud, is they want to spend somewhere in the neighborhood of 10 to 15% of their spend with minority business enterprises, which means there's $1 trillion opportunity out there, but we don't have the businesses to meet that scale. So we've got to grow and create some bigger minority businesses.
Now, and this falls in line with what we focus on National Action Network of dealing with the generational wealth gap, that we've got to develop generational wealth, not just getting by kind of psychology.
That's exactly right. And this is first and foremost, we are chasing returns. So we want to generate very strong returns for the people who consider, partnering with us in this strategy. But more importantly, we think about the fact that those returns give us the opportunity to have this impact. And this impact is on wealth creation. And this impact is on narrowing the wealth gap that exists in this country. This wealth gap that has gotten bigger in this pandemic, and this wealth gap that has to be addressed if we ever are to have a fair and equitable society. It's going to come down to economics.
Now, lastly, talk about the co-investment from J.P. Morgan Chase. And I want to say this for people that don't know, and many NAN leadership knows. I don't know about our members and the public that watches this, but we've been working with J.P. Morgan Chase on larger commitments, several meetings with Jamie Dimon that you, Mellody, helped make happen. And he's been very sincere and very effective. I mean, we can actually mark off some data saying these things have happened. But talk about the co-investment from J.P. Morgan. Chase?
First of all, I appreciate you saying that. I'm just doing my part. I wouldn't have joined the board if I didn't think I was aligning myself with a company that had the right intentions when it comes to creating opportunity for everyone in America. And I'm so glad to hear that you feel that you're seeing the results that I am seeing as well. So that's great to hear that feedback. JP Morgan has committed to be a co-investor, a strategic partner alongside of us in this endeavor. And that's something that we're really excited about. And they've committed up to $200 million. They can go beyond that with board approval, but it's the $200 million that we think is really great to help add on to whatever we are able to do. So that is them putting their money where their mouths are, not just being ideas, but really, not just talk, but action.
Well, I appreciate your role there and in so many other places, Starbucks and all. You really, really have been one that has been committed and has shown it. And there are tangible, real things that would not have happened if Mellody Hobson hadn't happened. Thank you so much.
I wouldn't exist if you didn't do the work that you do. So it's because of you and others that I'm even here. And I will never forget that. I have a job to do.
God bless you. Thank you.
Thanks. Bye.
All right.
Good afternoon. I'm Robert Greene. I'm the CEO of the National Association of Investment Companies. We are a trade association of diverse owned that includes African American, Latinx, and Asian private equity firms. I'm excited to be here today. I want to thank Reverend Richardson, your chairman, and Reverend Sharpton, your president, for working with us and giving us this important opportunity to speak with their audience. I brought along a few friends, but more than being my friends, they are some of the most impressive business people in the country, bar none. And what I want to say before I allow each of them to tell you what they do is the topic of why is the National Action Network talking about business and wealth and finance and all these topics that you may not think of when you think about social justice. But let's not fool ourselves. What we continuously and disappointingly see happening on the TV news and in our streets at night is not only connected to how people see us, but how people value us. And in valuing Black and brown bodies less than, you have outcomes like we have today. And much of that starts with 400 plus years of being capital in a capitalistic system. So I've got people here that are far better at it and expert at it than I do. But I want to point out the importance of where they're coming from. So the quick answer on how is minority business doing? Minority business is bigger than you think. If you think about it in terms of storefronts and local Main Street type businesses, and frankly, smaller than it should be. So I'm going to we'll start ladies first. I'm going to ask Tammy Jones of Basis Investment Group to introduce herself and to tell us what her firm does and how she relates to the topic. Tammy?
Great, thank you. Thank you, Rev, and thank you all for thinking this was an important topic to talk about, because economic justice and racial equity, it's all of our concerns. So as Bob said, my name is Tammy Jones, and I am CEO and founder of a firm called Basis Investment Group. And Basis is a commercial real estate private equity investor and lender. So we basically invest public pension capital across the United States in all kinds of projects. We have a focus on workforce and affordable housing. I grew up in South Jamaica, Queens. And so that, some getting into home ownership and backing people in that regard is something really important to me. We also invest in community centers, retail, office buildings, you name it. And so wealth creation is important to me. I have also invested and loaned over $800 million with other minority and women-owned commercial real estate owners and operators across the United States. The other hat that I wear is similar to Bob's in terms of an organization. I am the chair of Real Estate Executive Council, which is the preeminent professional trade organization for African Americans and Latino executives in commercial real estate. So I'm happy to be here and looking forward to the discussion.
Great. Thank you, Tammy. Next, we're hearing a lot of conversation about infrastructure these days, infrastructure. And a lot of times when we hear infrastructure, we think of roads and bridges because that's the aspect of it that we touch. And we oftentimes think that this is government money used to build it. But in many cases, this is private investment capital. And I want to introduce Jim Reynolds of JLC Infrastructure to tell you what he does and how he connects to this broader topic. Welcome, Jim.
Hey, Bob, thank you so much. It's good to be with you all today. Thanks to Reverend Al Sharpton for hosting the conference. It's always the highlight of my year to be involved. And sorry we have to do it virtually, as I always love to engage with everybody in the room, especially Reverend Al. But this is a major topic. Obviously, President Biden has really escalated this topic to the forefront of mind, the infrastructure topic. One of the hats I'm wearing, I'm one of the main partners, Magic Johnson and myself, are two of the lead general partners in JLC, that's Johnson Loop Capital. That infrastructure fund has a little under $1 billion of assets under management, and it truly is what it says. We invest in the nation's infrastructure. To Bob's point, private investment in public assets is much larger than people think. Many of our projects, some of our projects you guys have been in before, when you fly into the new LaGuardia Airport, we're part of the equity in that transaction. It's the first airport terminal that's ever had African-American or minority firms as owners. We're also 30% owners of the JFK Terminal 1, which is the main international terminal. In addition, though, we do invest in roads, bridges. We have a sustainable energy platform that also does solar, does wind, does sustainable energy, and the like. And so as we look at the $2 trillion package that the president has proposed, we're very excited about it. We're excited by the impact on, it's going to be ports, it's going to be airports, it's going to be broadband, it's energy, it's water and sewer and piping and roads and bridges. So we're very, very thrilled. We think it's going to be an excellent opportunity to invest in and something we'll explore more. Particularly, Bob, I want to spend some time talking about how African Americans, Black and brown people, the incentives that could be used to get us more involved in that from an equity perspective.
Absolutely, Jim. We'll be sure to cover that. Next, I want to introduce Tarrus Richardson of IMB Partners. Tarrus is the founder of his firm, and his firm is heavily focused on the private equity side. We've heard from real estate. We've heard from infrastructure. Tarrus, please introduce yourself and tell us how you connect to this discussion.
Thank you very much. Reverend Al Sharpton, thank you for having me. It is a pleasure to be in this panel, in this meeting. I come to this work by thinking that minority business, African-American business has done a lot to grow small businesses and minority businesses, and we don't spend enough time talking about acquiring businesses. And so when I was a teenager, my dad, coming out of Vietnam, bought a bar for $120,000. And I saw him spend 40 years, employing people and creating wealth, both for him and his family, but also making sure people had jobs. I saw a person named Reginald Lewis buy $1 billion business and become a member of the Forbes 400 when I was 17, 18, 19 years old. And you roll forward sort of 30 years later, and the number of us that know how to use mergers and acquisitions to grow Black business just isn't enough. And so a part of my dream and a part of my reason to be in this panel is to just encourage. By way of background, I like to do, not just talk. And so today I own about $700 million of revenue by way of acquisitions of IT businesses, utility businesses, food businesses, servicing military, state government, and utility companies. And it's just as easy to buy and build a business as it is to start by way of an acquisition and create larger companies that are owned by Black entrepreneurs. So I'm great to be here. I love to talk about the technique of mergers and acquisitions and private equity. But thank you so much.
Thank you, Tarrus. And our final guest speaker today is Martin Cabrera. And Martin brings the investment banking, but also some of the real estate and even some of the political aspects to the conversation. Martin, welcome. And please tell us how you connect to the conversation today.
Thanks, Bob. And thank you, Reverend, for inviting me. I appreciate being here. And our company, Cabrera Capital, as you had mentioned on the investment banking side, is dealing with some of the largest corporations in the world, doing underwritings for them, and even with the help and support of the Reverend, and how he is kind of encouraging some of these major corporations like Chartwell and Verizon to be more inclusive. And they're working with him closely, but also giving the other opportunities to Black and brown firms. So Jim Reynolds, myself, and other firms have participated because of that. So we appreciate all of your efforts and all the work that you're doing, Rev, on behalf of so many others around the country. We are working with the federal government and Treasury Department as well. And there's a lot of opportunities, and even this conversation of how you can kind of work on policies to be more inclusive. But on the development side and the real estate side, we are working on about a $400 million project on the southwest side of Chicago. And we are the majority kind of developer, and we have a minority partner, but we are also including Black and brown firms that are architects, engineers, attorneys, to really demonstrate that as Black and brown folks, we can do this together in significant transactions, but that the money trickles down. And we're working on affordable housing, low-income housing projects, and we're looking at others around the country. So along with the capital provider, we are working on looking to identify some of the top talented Black and brown developers that we can kind of co-develop projects with around the country. But the impact is significant. And it's not just the businesses that are participating, some of the jobs that we are creating and getting folks into the unions. And some of those jobs are not minimum wage jobs. They start off at $42.65 an hour. And getting folks in the community that have those opportunities where they can provide for their family and have good paying jobs. It's critical and it's impactful. And we're happy to be a part of the conversation and what we can do to help implement some of those policies with the new administration, but also with some of the pension funds, which I know we'll discuss a little later. We're happy to be here.
Excellent. Thank you, Martin. So let me teach. My mother was an elementary school teacher, and I never want to waste the opportunity to give a little bit of a lesson to our folks. And this one will be quick. For those that walk around and perceive that communities of color are poor, I will disavow you of that notion. As a nation, if you add up the wealth of the minority population in the U.S., we would be the 7th largest economy in the world. And I point that out to you because it was the late 20th century poet Tupac Shakur that said they got money for wars but can't feed the poor. Our problem is not an issue of capital. Our problem is an issue of access to capital. Our capital is tied up in pension plans, right? So if you think of all the teachers, firefighters, public employees, other government sector employees, and even certain corporate folk that have pension plans, their wealth is tied up in those pension plans. That money in every city across the country gets invested quietly. They don't put billboards up about it. They don't print it in the newspaper. That money gets invested on a stealth basis, and it gets handed out to firms around the country to become partners, investment partners with them. Where that capital doesn't flow efficiently is to the firms that we come from, the Black and the brown firms. So I want to start with Tammy, and I want to start, Tammy, with the conversation around how you raise money. Surely you're investing a lot of different people's money, but you still have to go to certain entities, pension plans and foundations and endowments, and make a pitch to get your capital. Talk about how that process works and why it's challenging.
Will do. So first of all, 69 trillion is the number that we hear about globally, the assets under management for some of these pension funds and other endowments. 1.3% is invested with African-American owned companies. And so when you hear that statistic, you know that there's a huge disconnect and a huge problem. So when I raised my first fund, I had to be strategic because it wasn't, even though I had a long, history and track record of doing this business, some of my white counterparts could roll out of firms and just get 500 million of capital. I had to actually figure out how to go to get capital where I was welcome, because Black and brown investment management firms, for whatever the reason, even though there's no data to support this, we are perceived as more risky. And so that's the first thing. And despite the fact that our firms, Black and brown, particularly African-American firms, which I'm focused on, we outperform many of our peers. And so that's the first challenge or barrier. So I decided to be strategic about my fundraise, and I went to places around the country where I actually saw a woman or a minority that would be somewhere in the process, because often the investment teams all, white and or largely white, and so you have to go before them. There are various gatekeepers in the process that are actually the pension funds have to consult with. They're called consultants, to give a little bit of a lesson like Bob was doing. And so many of those teams don't look like us. And so I went around the country to places where there was a African-American CIO, and these places are not that many, to be honest. And so what happens in our process is we're not able to raise funds that are as large as some of our counterparts. And so and it costs minority businesses a lot more money. And so what we need to do is to figure out how to break down each of the barriers, because study after study shows that if given the opportunity, African-American firms will invest together. As I mentioned, I've invested 700 million with other firms, and we hire each other. 78% of my team is women and minorities. And that has a multiplier effect in our communities. In real estate, I could go on and on. 90% of the large-scale developers are white men in real estate. And many of those folks have backing from these public pension plans as well. And so these are the folks that are building in our communities, which is why it's so important to have people that look like us that are actually investing this capital, backing other businesses. And so because there is a multiplier effect. So it really is about breaking down the barriers, shining a light on the issues. The data doesn't lie, and making sure that we are holding the public pension plans and any of the folks that are actually allocating this capital accountable to making sure that they have diversity in their managers, because that's going to lead to better returns. And so I'll make this final point. I would offer that if you are not investing with diverse folks that look like us, then you are not doing your job to maximize returns.
No, that's exactly right. Jim Reynolds, when I was in driver's ed in high school, the teacher told me that it cost $1 million a mile to build a highway, right? $1 million a mile. And my mind just raced with how many miles that was and how much it would cost. And I'm sure that, given as old as I am now, that inflationary number has taken it up to about $5 million a mile. But if you do that math, Jim, there are going to be billions and trillions of dollars spent. What does it mean for our folks to be in that game? What can happen if we're in that game? And what's the dividend for the African-American and Latinx community? That's an amazing point. And it's a point that you could say over and over and over, because remember, we're always continuing to build either new highways or redo the old highways year after year. The technology around, the technology around tollways or toll-less, gateless tolling and people-less tolling, and on and on and on with infrastructure. This is going to be a major business in the United States to infinity. The United States was late to this infrastructure game, private capital and infrastructure, because we always had a municipal bond market. And in Europe, in Asia, Australia, Latin America, there's always been private investment in public assets. But in the US, it's a very new phenomenon. I will tell you, and I want to pick up on Tammy's point, and it's very good to see Tammy. It's been a while. Good to see you, my dear. I will tell you one of the things that helped us raise money, and it's a few pointers that I want to just kind of hand out around what we do and how we do it. And Bob, your efforts at NAIC have been absolutely valuable in allowing and opening doors for all of our firms to raise money. But I think what you notice and what I've noticed, and you would probably agree,
The African American and Hispanic owned businesses, the Black and brown businesses that really seek dollars, the ones that have been the most hurt are the ones that are invested in almost what is known as a commodity sort of investments, large cap equities, mid cap equities, fixed income. Those have been hit very, very, very hard. You would also agree, though, that the areas of minority-owned managers that have done the best have been the alternative management firms. Yep. Probably some of the most successful are in that private equity space where Tarrus is. Mm-hmm. And they raise money and they close their funds in weeks or months. I've got one of my buddies, Marty Nesbitt at Vistria, opened and closed $1.5 billion in just a few months. Yeah. So it is there. Some of the things that you have to be mindful of, there's one, what is the asset class that you're in? Mm-hmm. What is the structure of your team? What's the competitive environment out there and your track record? You are absolutely right, but the progress has been made that it is more difficult for minority-owned managers to raise funds. But there is certainly opportunities that continue to be there. We had a great deal of success in our first fund with insurance companies, with pension plans, and it still grows. And we're going to probably do our second. We expect that we will have even greater success because of the space we're in. Like you started off with, infrastructure is a new asset class. We have a unique investment team that knows it. We're connected to a public finance operation. And Magic and I are together. Mm-hmm. And so when you look at all the boxes that we check, it works. But Bob, as you know, and you've been in this longer than anybody, you don't want to have too many chinks in the armor or too many weaknesses in your approach, because they will get capitalized and jumped on. But if you come with the right team, right group of professionals with the right track record and background, you have a much easier time accessing capital.
Yeah, thank you, Jim. That journey across capital and how we get to it is an amazing one. And you're right. From an infrastructure standpoint, we're going to perennially be in that business and constantly need to do it. So that's fabulous. Tarrus, I've learned a lot of things from you over the years, but one of the things you've taught me is the importance of scale, just how critical scale is. Talk a little bit about what the capital allows in terms of scale and why scale is so important in what you do.
Sure. Again, Bob, the biggest opportunity is to figure out how to make sure that when a bad market comes, a customer leaves, that your business can sustain itself. And so making sure you have enough scale, whether it be in the capital base you have, the customer base, the revenue and EBITDA, is sort of quintessential to making sure you have viable Black business going forward. That said, on the merger and acquisition front, if a business owner or if an entrepreneur listening to this panel is trying to get into the business, what you have seen historically is that we always rotate to relatively smaller acquisitions because that's what's easiest for us to access, and we've limited ourselves. And what Mellody is talking about with Project Black or the conversation today is, how do you pursue businesses with 10 million, 20 million, 50 million of EBITDA that may be valued at 50 to 500 million? Mm-hmm. I believe today, whether it be the people on this panel or in the network at NAIC, that you can raise the money if you secure the deal. And the bigger the deal is, it turns out it's actually easier to raise the money than when you're doing smaller things. And so the aspiration of the moment is simply to make sure that we're not limiting ourselves to doing small things.
Mm-hmm. Awesome. Martin, you've had many conversations with labor leaders. You have helped them think about it. But the truth is that labor controls a lot of capital in this country. And when I think of labor, I not only think of African Americans and I think of Latinx professionals, but you think of a lot of women in the labor movement. Why is this so hard, right? Labor and the people that how we grew up and who we know, it should be one and the same. Why is it so hard to get labor and others involved in directing their capital to Black and brown people?
Bob, I think it goes back to looking at the leadership. When you have Black and brown folks that are the paying dues members, they are the ones contributing every 2 weeks into the labor pension fund systems, as well as the service employee pension funds. So they are the ones where when you see kind of the laborers, they are the workers. But when you look at the leadership, there are very few Black and brown folks that are actually controlling the money. Mm-hmm. And that is what's imperative of what will impact and how the money is decided on where it's going. Those individuals, Black and brown, are going to know that they can invest in Black and brown firms and Black and brown neighborhoods where they can make money. But it has to stem from the top. I think for SEIU, they have come out with a program where they're going to be more inclusive for all their pension funds. Mm-hmm. But also you can look at laborers, international, carpenters, and ask and beg the question, why are there zero Black or brown money managers, private equity firms, real estate funds that are doing business with any of them around the country? So, and this goes to the pension funds, the corporate pension funds around the country, where as Black and Latinos, every 2 weeks, they are putting their paychecks into the pension fund system. Mm-hmm. And we're good enough to put our money into the pension fund system, but what they're telling us is that we're not good enough to manage their assets.
Okay.
And you can look at the federal pension funds and the unions that are kind of working on some of these kind of initiatives that are going to benefit them, and even on an infrastructure bill that goes out. But it should be tied, and some of the policies should be tied to including Black and brown firms with their own individual pension funds around the country, whether it's New York, Chicago, it could be in Texas, California, wherever it may be. But there has to be policies that are going to be more inclusive. And to Tammy's point, those firms that are Black and brown, they're smaller, so they're going to work harder and outperform because they know they have to exceed expectations. Mm-hmm. They can't be like the status quo. They have to kind of go out there and outperform some of their peers. And that's what you're seeing, but you're getting that alpha, which is helping the pension fund. But until you kind of have the conversation at the top that this is what needs to happen and this is what needs to change, that's when you start to see kind of some of the money trickle out of the pension funds, whether it's public pension funds or union pension funds. And some of those conversations can happen from the new administration and some of the agency heads as well.
Mm-hmm. Excellent.
Hey, Bob, can I say one thing? Because I just want to follow up really quickly on that. Sure. And the other thing is, when I raised my first fund, I had 16 investors, mainly public pension plans, and it was only $410 million. If I was another large scale firm, I should have had a $2 billion fund. Mm-hmm. The problem is, and Tarrus said this, it's about scale. The other problem is these small little bite-sized allocations make it really hard for minority firms to actually scale, pay their employees, and do all of those things that we need to do to actually grow. And so when we look at trying to change the landscape and be different in this time, we have to try to make sure that the allocations make sense, because as we've said, there's no empirical evidence that we don't perform. So there's not, it's unconscious bias in its purest form that we're seeing.
Excellent. Thank you for that. Okay, so we're going to do a quick round robin, and I want you to tell me about a pension plan that's doing a good job, right? Tell us about who's doing a good job at trying to be inclusive. And I want you to think in the back of your mind, if Bob asked that, he may ask another question as well. Let's go. Let's start with Jim Reynolds. Who's doing a good job at getting capital to the people, Jim?
Well, Bob, I'm from Chicago.
I do know that.
I think you know that probably Chicago is responsible for seating more minority money managers, not Chicago, but Illinois, mm-hmm. than any other state. At one point in time, we were the only state that had about 8% of the total assets of the pension plans with minority managers, and the closest next one was maybe 1 or 2%. So I'm going to give you an answer and say Illinois is.
Okay.
IMRF, ISB. I think Illinois is doing an amazing job, and I think many folks on this phone and other folks in NAIC would say that. And I think it's really been, candidly, and I'll be real quick, a bunch of Black folks and brown folks really banded together.
Tell that story. You don't have to be that quick. Tell that story.
Well, I'm glad you asked me to tell it, because it's amazing. I know Martin has been involved in it too. But probably 15 years ago, John Rogers, myself, Lou Holland, late Lou Holland, Quentin Primo, really noticed that all of the Illinois plans basically had virtually no minority investment managers, none. Mm-hmm. We went to the gentleman that was president of the Senate, Emil Jones at the time, legendary. He really went out and started talking to those pension plans and made it very clear to them that if they wanted any legislation to be heard or any funding to be received, they had to change their ways. You've been to the hearings. You know, we have hearings every single year with those pension plans, and those questions are gut-wrenching for some of them in terms of, are you using any minority-owned managers? I think that story is one that really spawned several others. We know New York City kind of followed suit with that.
Jim, don't take that. There aren't that many good ones. Don't take them off. We need to leave some for the panelists.
All right, I'll leave that.
Right. But you just took the whole state of Illinois. You got everything from Springfield to Chicago. Yeah. All right.
I'll take that.
I'm going to go to a son of Illinois now. We have 3 sons of Illinois on here. Tarrus Richardson, who's doing a good job?
I'm going to, sort of follow Jim. I'm from Chicago, so I learned the lessons there. In New York, we were like 9th in the country in terms of public pension plans in 2004 through concerted effort of Carl McCall, Bill Thompson, a lot of advocacy. If you take New York City, New York State, New York teachers, they are putting more money to work. They're putting it into fund of funds to make it available both for smaller allocators to invest in the smaller funds as well as direct investment. I think we're doing a good job. The only challenge is we now have to convert from saying, we can do 10s, 20s, and 50s to now we can be 40% of New York State pension plan and 40% of New York State teachers. And the mindset just has to keep evolving to the fact that we should get our fair share, which is parity of the money invested by these plans, because we have the resources and capabilities to deliver the returns they need without apology.
Well, Tarrus, we may need to sweet talk Cara Wallace into going back. She was quite an engine in that.
That's for sure. Martin Cabrera, who's doing a good job?
Bob, I would say that it has to be, when you look at based on fees that are being paid out by the pension funds, it would have to be the Illinois funds. So there's Illinois State Board of Investments. It's the state treasurer's office who's been sometimes the first kind of treasurer to fund some of these organizations and mutual funds, cash management products, seeing a 6-fold increase, a 600% increase in their brokerage opportunities with minority and women-owned firms. And then also you've got to give Chicago Teachers Pension Fund credit as well.
Yes.
They're at about 36% minority and women-owned businesses that are managing their assets, and their brokerage policies are exceeding 50% of a $12 billion pension fund. I think New York City has done some great things on the brokerage side and on the money management side, and they continue to improve. But what we want to see is that our equity and our population is reflected similar to those pension funds as well, because we are the ones putting our money into the pension funds every 2 weeks. And that has to be reflected in equity.
Tammy Jones, the pandemic has the guys staying at home. They all want to talk about Illinois.
No, so I'm actually raising a fund right now, Fund 2, and I'm, God willing, halfway done. So I agree in Illinois. So Jim, hands down, Angela Miller May is my girl.
She's great.
She's awesome. So definitely, I had $100 million in my first fund from Illinois, so I'm all about that. But New York City came into my first fund. The Bureau of Asset Management was where the real estate group resides. They believed in me. They were my second investor, and they came in size, and now they're coming in, God willing, to my second fund, and they're helping me scale. So there's a real commitment in New York City, and I'm proud of that because I'm from Queens, and I got to tell you, it means everything to grow up in the neighborhood that I grew up in, and then to be able to come and talk to the trustees and tell them that I'm going to invest and protect your capital because you are me, I am you, you are my family. And so that's great. And I'm going to tell you something, the state of Connecticut has a African-American treasurer. I'm going to give a shout out to Baltimore. And when I said the strategy that I went around the country, I went and found us. And that meant that my fund wasn't going to be big, but at least I was going to be successful. And so now I'm hoping to, raising capital by Zoom is a whole nother thing, but.
So we'll add a couple other names in there. The Texas Teachers Retirement System, our mutual friend Jarvis Hollingsworth is pushing hard and investing capital. And I think every one of the plans, including the state of Illinois, could all do more, right? So we're not taking anybody out of the line of fire. The question was who's doing well. And surprisingly, the good folks in the state of Virginia have found a way to invest more money as well. Now that I've asked that question, I'm gonna see how brave y'all are. Who needs to do more?
I'll start off, Bob. I think when you look at California and you look at some of the largest pension funds in the country.
How big are you talking, Martin? How much capital they got?
So there's $1.6 trillion in the state of California, pension fund dollars. We've analyzed some of the biggest pension funds looking at CalPERS and CalSTRS. When you look at the fees being paid out to Black and brown firms, it's less than 1% combined. And this is a state where you have 40% Latino, 10% African-American, 15% Asian. So there is no equity there when it comes to the pension funds. And that's one area that those are just two of the largest. CalPERS is about 420 billion, CalSTRS is about 280 billion. But that is where they need to do a much better job and where some of our elected officials need to focus in on how do they create change, because that is going to close our disparity gaps. When firms like ourselves on this panel get access to the capital, we are hiring our own folks and we are creating wealth, but we're spreading it out throughout our communities. And it's recirculating those dollars amongst our firms. And we're working with each other, Black and brown. So when they talk about some of the equity gaps, this is the first place where you need to close those equity gaps. Mm-hmm. You can look at all of the pension funds in California, whether it's a university, whether it's a public pension fund, or even if it's a union pension fund, and their numbers aren't much different. They're closer to 0 than they are to 1%.
Yeah, good. I won't cold call anybody on this, but if you want to volunteer, I'll leave the mic open.
I was just going to say, I agree with Martin. I was going to say the same thing. I tried really hard, wasted a lot of money flying because we weren't in the pandemic, flying back and forth to the West Coast, 0, nothing. And
Tammy, what's some of the reasons? You have great returns. You built an outstanding firm. Why would somebody tell you no?
Because I didn't know anyone who was making the decision. There was not a person of color. In some of those meetings, it was just all, white men, or they have gatekeepers that I wasn't one of the preferred firms. It's just harder to deal with. I guess the way I would say it is, it's if they make a mistake with a minority firm, if they're investing with some of the larger firms, and I'll just say like the BlackRocks and the KKRs and the big firms, they have cover. If they invest with us, they look at us as risk, again, despite no evidence to that. And so that was disappointing. I'm hoping that it'll be different this time around, but it's not going to be different if we don't apply pressure, shine the light, and enforce that this is important to returns.
Yeah. So I'm going to shift gears. Sure, Jim.
Can I real quick? I'm going to throw you a curveball, but when I say it, you're going to say, Jim, you're right. Foundations and university endowments.
Yep.
What's interesting about those two, unlike a lot of the state plans, there are more minorities and women on those boards
I know.
than you will see, but a lot of them just don't pay attention to this part of the discussion. And if we could educate them to tune in, that's a huge pool of dollars that can move a lot more quickly than a state pension plan.
Yeah, and so I'll make this point. I grew up in the Black church, and end of October, around Halloween, first week in November before Election Day, if you're at Black church on Sunday, you'll see a politician show up. And that politician will usually be running for some executive office. He's going to be the city council member, the mayor, the governor. That's cool. But I would encourage the clergy on the phone, invite the treasurers, invite the chief investment officers. But those that are going to be running, listen to them. You want to talk to them. Most mayors don't direct capital. Most governors don't direct capital. They do appoint the trustees. And in some cases, they appoint the sole fiduciary. There are some places in the country where one person is signing checks for $100, $200 million. So I encourage, as we think about the opportunity to talk to the National Action Network, invite the money people, not just the executive folks. So we got a few more minutes. I want to talk about something that's kind of near and dear to my heart, and it's the distinction of diversity within your firms versus the marketplace. As I think about each one of your firms, Tammy, your firm is female led, but every one of your firms has senior women in the business. Talk a little bit about your hiring practices, how diverse your firms are, and what you're doing to help the community. Tammy, we can start with you.
Great. So I mentioned briefly in my opening comments, but 78% of my team is women and minorities. And that's not, first of all, you have to be intentional about, changing the landscape, and it has to start from the top, period, end of story. But I have to tell you that being diverse is it's in my nature. It's my network. It's how every one of my searches for any employee, my team knows it has to have, be inclusive. And we're going to, hire the best person. But I don't understand why, if I can have a team that's 78% women and minorities, and also make sure that I'm doing business with other women and minorities, and I'm actually tracking it, and it's something that's near and dear to my heart, why other firms are having such a hard time. We are out here. And so at the end of the day, for me, it's about not just basis, but also getting capital that I am investing from the pension funds into the hands of other, as I mentioned, minority and women-owned real estate companies. And I'm really proud of being able to help other people become entrepreneurs, because as Martin said, it's about the multiplier effect. It's about wealth creation. So we can't just focus on hiring, which is important. Jobs are amazing, but we also need to do this wealth creation thing. And that's where minority firms, time after time, we hire each other, we invest together, and we invest in our communities. And that's what Basis has done. And I'm really proud of that, because I wanted to be different than those other commercial real estate platforms that didn't do that, and just were really not able to do the things and go into the neighborhoods that I will go into and invest.
Yeah, thank you for your leadership there, Tammy. It's very obvious when you look at your firm and your website. Tarrus, diversity has been at the core of what you've done your entire career. Talk to us a little bit about how you formulated your firm and how you think about giving back.
Yeah, first, when I look at Jim, my team, Tammy, we all are making money, not just because we've hired 50+%, 80+% diversity in our firms. I happen to have 80% diversity in my investor base. We make money because we see some that other people don't. And we generate, for me, 30, 40+% investment returns. And so I'm not apologetically showing up asking for money. I'm just trying to make good money where others don't see it. And at the end of the day, if it was so easy to do, everyone would do it. Mm-hmm. And I'm not trying to get the rest of the country to come run into diverse markets, run into diverse networks to hire everybody, because they take some opportunity away from us in the process. Mm-hmm. And they don't recycle the money the way we would. But for me, it's about hiring people in your companies. It's about intentionally making sure your board's diverse. It's about intentionally making sure you have diversity practice in all your recruiting. If you do that well, you will see and have different opportunities that should create much better returns.
Excellent. Thank you for your leadership on that, Tarrus. Martin, both your diversity, but also some of the stuff you do in the community to give back as a firm.
Sure. I think on the diversity, as you know, Bob, we talk about it and preach it, and we've got to practice it as well. And you have to be intentional, to Tammy's point. And you have to go out there and I want to identify who are those younger Martin Cabreras that are gritty and hungry, and giving them the opportunity that they might not have otherwise. Mm-hmm. And providing those opportunities and bringing them to our firm, but also providing those internships for those younger folks that are kind of doing well and going to school, but are also who are hungry and are looking to go out there and not just kind of be great at their job, but also to be involved and to make a difference. So that's something that is very important to us, but also on what we're doing. Who are we doing business with? Are we doing business with other minorities? Kind of who's doing our legal work? Who's doing our printing who's our other kind of professional services fees that we're working with, and also asking them to give back. So when we work with other architects and engineers and construction companies, I'm asking them to get involved in the communities that we're serving as well. So, and not that they're just minorities, we're asking the white firms to do the same as well. So that's what's key. I think for giving back, we've been blessed, and there are a lot of opportunities that we've been given, and we have to give back. So it's not just through the jobs, but it's through the giving and making sure that we're intentional about that giving. We're going to be announcing a financial services school, and we're excited about it, but it's part of our DNA. And it's not just from our leadership, we encourage it from all of our employees at the firm, because that's how we can do well financially, but we can also make a difference.
Yeah. Jim, JLC, which you're representing today, sits atop two very large and successful firms, Magic's firm and your legacy firm, Loop Capital. But I want you to talk about your history on what Loop has done and how you've given back and supported the community.
Well, Bob, I'll tell you one, thank you for that opportunity. I think you have to practice what you preach. I know my president, Courtney, she's Black. My CFO is Black. My GC is Black. My head of HR is Black. My corporate finance head, Sidney Dillard, is Black. Public finance head, a lot of the key people inside of Loop, it's a little over 200 of us, are African American. And so I really believe in that. It's what we've also done through our internship program, which Courtney Gibson came through as a sophomore in high school. Mm-hmm. She's now president of our firm. Probably will put more Black and brown people on Wall Street than any other firm in the business. Mm-hmm. We've had 22 years now of interns, and our Loop Capital Markets interns, the ones we don't keep, we can only keep so many, are basically populating every bulge bracket and middle tier firm and asset manager in the country now. Our internship program this year, we took 30. We had 1,000 applications. Normally we have 300 to 400, primarily from minority-owned students. My own philanthropy, which is very important to me, and Martin knows this, and I think you know this about me in Chicago, is I really focus on those minority communities, particularly at-risk youth. Black kids shooting each other, Hispanic kids shooting each other, how we can actually turn the tide on that. And so I really believe that we as minority entrepreneurs have a major obligation to stay embedded in those communities that we're a part of. And we got a huge, huge responsibility to reach down and pick up others. So I'm really, really proud of what Loop Capital has been able to do and JLC has been able to do to impact our community.
This is an easy question to ask because I know the answer on each one of them. So I'm proud. I thank you all for sharing, and I'm proud of what each of you has done. In the remaining several minutes we have an opportunity to message to President Biden. We have an opportunity to message to the Secretary of Commerce. And I think everyone here that was paying attention in November knows that this president owes a tremendous amount to communities of color, particularly the African-American community, but also the Latinx community. I'd like for you to each go one by one and give the president a piece of advice. What should the president be doing to help diverse finance professionals? And what is your recommendation to him? I won't cold call because I know each one of you all needs a moment, but chime in when you're ready. Martin, let's start with you.
Sure. Bob, I would encourage the president, before any policy, any initiative, any bill that is going to be going out through each of those agencies, whether it's Secretary of Treasury or kind of housing or even for transportation, that those secretaries are giving a concrete plan of how those monies, a portion of those monies, are going to go to Black and brown firms. They need to ensure that it doesn't get lost, or that they're going to work on it after the bill goes out, but that they're going to be encouraging folks to be inclusive, and also addressing the 11 pension funds, for the federal pension funds, that have zero minority participation in those funds.
Say more, Martin. Who are those pension plans? What are some of the names?
I think Federal Employment Retirement System is one. You have the Army Pension Fund, the Navy Pension Fund, PBGC as well. So
Federal Reserve, right? Federal Reserve.
Yes. Federal Reserve. You also have National Railroad, correct?
Correct.
Yep.
And when you look at them, it is unfathomable to think that there are no minority firms around the country in all the asset classes that couldn't manage a portion of those assets. Yeah. Right now, they're at zero. And
how much capital would you guess is tied up in those plans, Martin?
I would guesstimate it was somewhere around $2 trillion, maybe $2.5 trillion.
Yeah. $2 trillion. So the headline is $2 trillion, no capital to minorities, and no minorities on the boards. Okay, that's a solid recommendation for the president. Tammy, you got something, President?
Yeah, I would add, President Biden, please look at the CRA credit for banks and actually look at how they're investing capital. Also focus on public-private partnerships and making sure that we're going around the country and ensuring that there is equal access to capital, because public-private partnerships drive the economic development. And then finally, I would say the public pension plans, make sure that if there are any situations where the federal government is involved and can help us to do what Illinois did, and to try to figure out how we can make every state really focused on, how and why this disparity needs to change. And so we're going to need a lot of legislation. And I think, invite us in, invite the business leaders in to help you, because there are things that we can educate your administration about.
Outstanding. Tarrus.
$2 trillion about to be spent quickly. Transparency. If you could just tell us how much the money goes to white-owned firms, black-owned firms, Latin-owned firms, and Asian firms, it'll help drive the decision-making to make sure it's more equitable. And then finally, in terms of the SBIC, at the end of it, they have tons of money they spend every year, and the amount that's going to black-owned firms and women-owned firms and Asian and Hispanic firms is too small. And so just making an intentional decision to basically change the criteria, because for some reason, years of experience, amount of money raised, it's leading to a lot of no's and not enough yeses. So those are two simple things you can do to make sure more equity is happening and capital they are about to deploy.
Great suggestions. Jim, I'm gonna let you bring us home on this point.
I'll bring it home, and I'll agree with Tammy and Martine and Tarrus. But I would say to those ends, particularly these federal pension plans, I would add the agencies, the Treasury, I would say have some concrete goals and objectives. I mean, we've lauded the efforts of Illinois and the work of Illinois. That was all done because they put goals in place, and they had measurements, and they had actually something to actually hold folks accountable to. We really missed it under the Obama administration. If you know, Bob, we went on these meetings and sat down with these folks, and then nothing really got done. But I would love to say, let's not waste that again. And then let's go and let's add some goals and objectives as it pertains to this.
Good. And I'm going to add one for the panel as well. President Biden, please make sure in the vetting and the interview process for the people that you appoint to all your boards, all of your commissions, that those people reflect your values and the best thinking in line for people of color in this country. We can't do anything if if the executive of the federal government, the president, says he wants something, and then you systematically appoint people who do the exact opposite, and there's no accountability for it. So we're going to hold board members and people that we appoint accountable. We want you to vet these folks and not put them on. If there's any doubt that they're going to do what you want done, don't put them on. So I think we've given you 5 outstanding suggestions. Hopefully the president is sitting right now listening to what we say, or hopefully somebody gets those messages to him. Anyway, folks, you guys are all busy. You guys all have a lot going on. You're running billion-dollar businesses. On behalf of the National Action Network and Reverend Sharpton and Carl Wallace and Reverend Richardson, I want to thank you for your time on this panel. I want to thank you for your expertise. And most of all, I want to thank you for continuing to be soldiers on this battlefield, pushing for capital to go to the capable hands of people of color around this country. God bless you. And thank you so much for being on the panel today.